February 1st, Sunday, Finance Minister Nirmala Sitharaman will be presenting the Union Budget for 2026. It's a critical time for the country as industries and consumers are feeling the heat of the tariffs imposed by the United States. For investors, stock markets will be open in a special session on the budget day, and all eyes will be on key announcements. Data from 2010 to 2022 shows that stock markets often trade lower ahead of the budget due to fear of policy surprises, though post-budget rebounds are very common. Over the past 15 years, as per a report, the average return for Nifty 1 week before the budget has been negative at 0.52%. Only on 8 occasions it closed higher, and in the preceding 5 years, in 4 cases, there was a drop, including in January 2025. So what is the outlook for this year? Which sectors to watch out for and which stocks are on the radar of top investors? Let's decode. First, let's talk sectors, then we go stock specific. As Capex comes into focus, themes that benefit from higher allocation will be something to watch out for, like defense, as Operation Sindhu revives expectations of rise in defense spending. Railways, as it has utilized over 80% of the allocation given in the last budget, which signals strong execution. Industry estimates a 5% hike in allocation this year. Infrastructure, which continues to be a top priority still for the government. Export-oriented sectors like auto, gems and jewelry, textile, etc., as they have been hit with tariffs, and the government may announce some relief to offset the impact, like PLI allocation hikes. Auto and electric mobility, as government is still focused on localization and EV adoption. FMCG and retail, as consumption is beginning to recover, supported by easing inflation and tax relief. Semiconductor and electronics, as budget may prioritize incentives for Indian designed chips. Chemicals and fertilizers, as expectation is that the government will push for uniform tax across fertilizers. Jefferies says that renewables, real estate, hospitality and defense are key sectors to watch out for. Now coming to the stocks, Axis Securities has 26 stock picks to watch on February 1st from 8 key sectors. First, from the banking and financial sector, it is SBI, HDFC Bank, Bank of Baroda and ICICI Bank, which could be biggest beneficiaries from the budget this year. Next, in infrastructure and housing, Ultratech Cement, Dalmia Bharat, JK Cement and Ambuja Cement. From pharma and healthcare, Divi's Labs, Syngene International, Sun Pharma and Apollo Hospitals. From tourism and hospitality, Indian Hotels and Charlotte Hotels. From telecom, Bharti Airtel. From metals and mining, Tata Steel, Nalco, SAIL and Hindalco. From auto, Maruti Suzuki, iShare Motors, TVS Motors, Bajaj Auto and Ashok Leyland. From chemicals and fertilizers, Dhanuka Agritech and PI Industries. In defense, Jefferies says that its top picks are HAL, followed by Bharat Electronics and Data Patterns India. So how should you position your portfolio ahead of budget day? Well, it's expected that budget will focus on capex, manufacturing and macroeconomic stability this year, even as geopolitical concerns and interest rate uncertainties persist. Experts say that diversification and balance are key. They suggest maintaining exposure to stable large cap stocks while complementing some positions into other assets, defensives and mid caps. Experts say that long-term allocation is still essential. So all in all, diversification is key. Keep yourself safe first, then risk it if you have capital left. All that said, take advice from your registered financial advisor before making any money related decisions. And lastly, for the budget trivia question today, which year was the dream budget presented? If you know the answer, comment down below and the right one gets pinned.
If you like this video, then like, share and subscribe to ET Now.